Hello, welcome to Escrow Escapes. This is the real estate stories, market trends, and true tales from the front lines of closings. I am Matthew Halliday, Navy veteran and father of three girls, also a full time real estate agent. Let's get into it.
3 days before closing, the buyer's moving truck was on the street when the title company called, funding stopped, and the sale froze because a contractor recorded a lien on the house. Everyone had 72 hours to fix it or walk away. I'm Matthew Halliday. Welcome to Escrow Escapes. Today I want to show you exactly how this almost derail happens, and 3 real moves that saved the deal. Quick scene. Seller had a small kitchen upgrade. Counters, trim, a few custom touches. Part paid. Balance outstanding. The contractor, frustrated, recorded a mechanic's lien the same week the seller accepted the offer. Title exam shows the lien. Lender says no wire until title is clear. Buyer's move-in day, put on hold. Ouch. Who pays? Who signs? Nobody knows in that moment. That's the panic point. Here's why a recorded lien stops a closing. A lien attaches to the property and clouds the lender's first lien position. Lenders won't fund when their security could be subject to another claim. Title companies won't clear policies with unresolved encumbrances. Result: escrow pauses and everyone scrambles. Let's break it down. First, how you prevent this before it ever becomes a crisis. What does it actually look like? Ask for final lien waivers from every contractor. Plain and simple. Get canceled checks or proof of bank transfers for major jobs. If money changed hands, show it. Check permits online. Who pulled the permit? Is it closed out? Permits often tell you whether work was legitimate and completed. If a general contractor managed the job, insist on a final conditional or unconditional lien waiver tied to the contract and final payment. That one step reduces surprises dramatically. Early is the word. Catching this during due diligence saves time, money, and stress. When a lien pops up late, one practical rescue is an escrow holdback. Here's what a good holdback looks like and what to watch for. Definition: an escrow holdback is a specific dollar amount withheld from the seller's proceeds until the lien is cleared or bonded off. It lets the buyer close with title insurance in place while protecting the lien claimant's potential recovery. How do you set the amount? Often the lien amount plus a buffer for attorney fees, sometimes roughly 150% of the claimed lien, depending on the title company's comfort level. That buffer is deliberate. It covers surprise costs. Sample clause you can propose to escrow. Escrow shall release the held funds upon receipt of a recorded lien release, or a title company approved mechanic's lien bond, or upon final court determination clearing the lien. Keep it objective and tied to recorded documents. Pros and cons in a sentence. Buyer gets keys and protection. Seller accepts a temporary reduction in proceeds. Agents keep the deal alive. But lenders and title companies must sign off. No one likes surprises, so get their buy-in early. If you're racing the clock, here's what moves fastest. Direct payment plus a recorded release, or a mechanic's lien bond. Both clear title for funding if handled correctly. First, call the contractor. Often a quick partial payment and a recorded release solves it in hours. Offer a prompt check and a recorded release in exchange. Many contractors will take that. Short, practical, and fast. If direct payment fails, consider a mechanic's lien bond. The bond replaces the lien with an insured obligation. It costs more than paying the contractor, but it lets escrow and lender move forward while preserving seller proceeds. Here's a short negotiation line agents can use aloud. We want to resolve this quickly so everyone can close today. If you file a recorded release upon receipt of a check for X dollars, escrow will release funds immediately. Alternatively, if you accept a bond in lieu of the lien, we'll process that within 24 hours. Say that, then follow up with this. Keep it short, focus on documented release or bond, and set a clear deadline. People respond to clear choices and timelines. One strong rule: don't improvise payouts outside escrow. Call the title company first. Ask, What documentation will you accept to remove the exception? How long must funds be held? Which bond carriers do you approve? Those answers keep everyone aligned. Quick recap. 1. Prevent by asking for final lien waivers, invoices, canceled checks, and permit closure records. 2. When a late lien appears, propose a narrowly defined escrow holdback with objective release conditions. 3. Move fast with payment plus recorded release, or bond the lien and get title counsel involved when the claim is disputed. One immediate action you can take right now. When you open escrow, ask the seller or listing agent to upload a final unconditional lien waiver from any contractor who performed work in the last 12 months, plus contractor contact info. Say it like this. Please provide final lien waivers and contractor contact info so title can clear any potential claims before closing. That single request prevents a lot of midnight phone calls. If you do hit a recorded lien and you're unsure, stop. Call the title company and ask for their instructions. Escalate to title counsel before making unilateral decisions. Professional help isn't optional here. It's protection for everyone involved. Preparation, clarity, and quick documented resolution. That's how deals survive the bumps. That's a wrap on this episode of Escrow Escapes. If this helped you, hit subscribe so you don't miss practical episodes like this one. Thanks for listening. And remember, every deal has its bumps. It's how you navigate them that counts. Catch you next time.
Thanks for listening to Escrow Escapes. For more real estate tips, market updates, and behind-the-scenes stories, subscribe wherever you get your podcasts. I am Matthew Halliday. We'll see you on the next closing. Thanks. Have a great day.